Hey there, it's Blair here at Time Trades. Thanks for joining me this weekend. We're going to be focusing a little bit more on execution details and precise entries of trades in this weekend's video. So let's get started. Okay, so what you're looking at here is the 30-minute chart of the QQQ. And in last week's video, I talked about how the highlight of this week was going to be the small pivot that happened on June 2nd, which was Thursday, actually early in the morning during while the markets were closed. So I had naively assumed that this small pivot was going to be a pivot high. It looks like instead what we got was almost a double top. We haven't quite broken down below a key level to confirm it as a double top, but it certainly looks like a double top with a high on June 1st and then a slightly higher high late in the day on June 2nd before we came crashing down on Friday. So I was a little bit off on that interpretation, but with the benefit of hindsight and a little bit more analysis, it makes sense now. And I'm going to share with you how that makes sense. And it's really interesting discovery. So as I zoom back, you can see here there was a small pivot back on May 17th. And these two small pivots bracket the medium pivot on May 21st. So if I go over here and draw a horizontal ray starting from the high price around May 17th, again, this is a 30-minute chart, and we put that horizontal ray on, we can see that it exactly tags the same price that was reached on Thursday morning as price came down. So it's almost as if these two small pivots that bracket a medium pivot are drawn to the same price. Now, that is more than just a curiosity, because if you go back to the last small pivot that bracketed a medium pivot back here in late March, early April, you'll see the exact same behavior. And this is what really blows my mind about this is we had a medium pivot April 5th, and we have the small pivot over here on March 23rd. So we can play the same little trick. We can put a horizontal ray on at that price, follow it across, and boom, it tags the exact same price that was reached on that small pivot day on April 7th. Now, this to me is a massive, interesting discovery, because the next time we get, small pivots bracketing a medium pivot, we can use this to create an edge. So this is a real interesting timing edge that is going to repeat a few times a year whenever we get these small pivots bracketing medium pivots. So that was learning number one from this week. And I hope you're as excited about that as I am, because I think it's super cool. Okay, so things didn't quite play out as I thought. I still think that this small pivot hasn't really taken effect yet. We had in effect a mini double top here. And next week, I'm anticipating, at least early in the week, that we get some lower prices to sort of confirm this as a small pivot. The bracketing behavior that I just talked about confirms in my mind that this indeed is an accurate medium pivot on May 23rd. And if we look ahead, we can see that the next medium pivot is coming in July. So what this means in general is that I've got a bullish bias through July when the next medium pivot is. However, I believe it's still going to be an upwards correction in a broader downtrend. So prices are going to be swimming upstream. We can expect lots of chop as we navigate our way through these small pivots up towards this medium pivot. Again, we can see what happened the last time that happened, which was between January 24th and April 5th. Chop mostly downwards. And then late in the medium pivot cycle, we got a strong surge up into April 5th. So this is the blueprint for what I think is going to be happening over the next few weeks. So it might be slightly more upwards biased than what happened last time. But on the whole, I'm expecting chop between these small pivots with an upward bias and a late surge up into the medium pivot in July, and then we can reassess from then. Okay, so that's the general forecast just based on pivots, not even looking at the time trades probabilities. I want to drop down into shorter time frames and share with you a technique that I've been using in my personal trading, and with the benefit of some look backs and analysis that I did on Friday, there's some really interesting setups that I want to share with you. Okay, so we're down on a 4-minute chart, so big change from the daily chart. So here's the week in one screen on a 4-minute chart, and what you're seeing here is the orange magic level from the time trades indicator. We've got the purple dashed line here. This is part of the price range from a moon void of course back on April 9th that has had a lot of influence over price, and you can see it's still interacting with price, which is really interesting. And the green line here is that ray that we just drew from the last small pivot. So if we just look at this, it just looks like a bunch of chop. It's really hard to make heads or tails of this price action, but let me show you a way to make some sense of this. So what I've been doing here is using fib retracements with Pythagorean levels. So let's just unhide these. Okay, and I'll show you these levels because these are coming straight from Connie Brown's 30-second Joule book. And the Pythagorean levels that she uses there range from 0 to 1.2. So all I did was I took those levels and I normalized those so that they range from 0 to 1. And this is the result, okay? So when we take a look at these levels and apply them, we get some very useful prices here. So what I've done, all I've done with these fib retracements, and I'll draw one for you right now. If we just delete this guy. So this is just using the standard TradingView fib retracement tool, not a replacement, and anchor the top to a magic level, and then drag it all the way down to the next magic level below. In this case, it's the orange level down here at like 235, okay? And then you'll get these values, these levels that are based on Pythagorean ratios, okay? And you can copy these and set up your own charts this way. Now we're starting to get something interesting. And I've done the same thing up here between the magic level at 310 and the magic level at 322, okay? So what is interesting about this? What is the tradable pattern here? Well, we can see that price interacts a lot with these sub-magic levels. I'll just call them sub-magic levels for now. We can see here that it came down and it tagged this level here at 304. And this is the 0.755 retracement. and then it came up to the next magic level at 308, and it paused, pulled back a little bit, and then it went all the way through. So one of the things you'll see is this kind of pattern is actually very common when you see price touch a magic level for a first time, or one of these sub magic levels. It'll tend to pull back and then make another attempt at getting through. Sometimes it works, sometimes it fails. In this case here, it failed, all right? And we can see here, it came back to the sub magic level at 304, gained some energy, and then bounced back to 308, failed, had to pull back, gain a little bit energy, and then it had enough to get all the way through, to get all the way up to 310. So when we mark these on a chart, we can see some real interesting tradable patterns, and everything I'm about to show you will work on any stock, any crypto, any commodity, any time frame. I'm just using these sub magic levels because they repeat, they appear on a 4-minute chart, so you can see lots of examples in a very short time. So let's turn on these signposts that I've put in, okay? And we can see here the first setup on the 31st is a trampoline setup where price came down, tagged the magic level at 304, and bounced very quickly off of that up to 308, was turned back, corrected a little bit, got the energy it needed to go through. And then we can see here on Wednesday morning, price came all the way up to 312, touched that magic level. It didn't have the energy to get through, pulled back, made a second attempt. This is what I labeled the magic level retest, but it failed. So these failed retests really are amazing trading signals. And again, just because I'm using a 4-minute chart, don't think that these are day trading signals only. You can look for the same thing on longer term charts, just going against the standard time trades magic levels. So we got this failed retest here, and then we flush all the way down from 312 to 306, okay? And when we went through this magic level here at 308, we see the typical behavior of it trying to retest that level that it last penetrated. And again, that retest failed. So if you miss this first short up here, then here's another opportunity to short it here at 308 and ride it all the way down to the next level at 304. At 304, we see another standard behavior where price bounces off the magic level, comes back for another retest. This retest fails, okay? So now we're going back up to the next magic level at 308. This corrects here slightly, comes back, makes another try. This retest fails at 308, comes back down. So my point in saying all this is these magic level retests occur very, very frequently, and they're amazing trading setups. And you can basically trade whatever time frame you're most comfortable in, but I really think that this could be a game changer for me personally in improving my own trading execution and hopefully for yours. So you can see all of the examples here that I've tagged as magic level retests, just using these sub Pythagorean levels that I've embedded into this Fibonacci retracement. All right. So I wanted to share that with you guys. I think, again, this is a really cool discovery and hopefully something that we can all profit from. All right, so that is that. Let's move on to time trades and take a look at what we've got here. So I'm going to go through this a little quicker this week. I want to try and make these videos a little shorter. I think 20, 25 minutes is a bit on the long side. So we talked already about the general bullish bias that we have through July because of the medium pivots in general. So let's go to our models page and let's take a look out for the next 30 trading days or so. And let's take a look at stocks that are going to be moving up. Okay, so let's look at US. We can look at mean move up 1 standard deviation. And we see a few of the meme names here, TDOC, TWLO. Some of these things are really beaten down. And when you look at things like TDOC, it's spent a good amount of time basing here under 40 after this massive gap down. And we've got a lot of 1 standard deviation up moves here. This looks like a good swing. And one of the things that you can see here is it kind of peaks right around where you see that next medium pivot, right? I think the medium pivot date was like July 18th. So you can see here how this is likely going to be building energy. And the last run kind of starts around July 5th. So TDOC is something that I think is worth keeping an eye on here as it's basing and building a foundation for a likely move up after that big gap down. Let's also look at TWLO. TWLO is another one of these trending or trendy tech stocks that fell out of favor in the last few months. So again, similar picture to TDOC. Might be a little early to buy in. This isn't something I'd rush out and buy Monday morning, but we do have a nice pivot low here, June 8th, and a very nice cluster of 1 standard deviation moves up through late June. It does not continue into July the way TDOC does, but still looks like a nice swing potential here. So what else do we see here? We can look at Costco, we can look at end phase. So I have not looked at Costco before, but we can see here as we work our way down the list, we're getting less and less probabilities on the 1 standard deviation moves up. Still a bullish bias to this one though. Boy, it came back really quick, filled that gap, pretty strong recovery. Definitely something worth considering on dips. Okay, let's take a look at 2 standard deviation moves up over the next 30 days. And again, we see a few more of these trendy tech names. DraftKings, also known as Donkey Kong. We've got a nice cluster of 2 standard deviation days up here, right around a pivot low. So this looks like a nice setup, maybe a little bit more of a shorter term setup through mid-June. And we've got DocuSign here. That is also very high up on the 1 standard deviation list. We've looked at that already. And we can go and look at Zoom. So some of these, looks like there's some potential in some of these ARC type names, stocks that ARC has been investing in. So again, Zoom looks pretty good as well. So this is one good way to take advantage of some of the data and information that's provided here by Time Trades. And this is how I like to use the product to really help me find some of these stocks with the most potential that are in line with the general context and bias that I'm bringing to the table. Okay, let's take a look at crypto. Okay, so if we look at crypto, again, same thing. General bias up over the next few months through July with that medium pivot, but we can see a lot of we don't see any of the major coins here near the top of the list when we sort it by 2 standard deviation moves up or even 1 standard deviation moves up. So if we look at 1 standard deviation moves up, we've got EOS with a reasonable size cluster. However, it is generally declining and we've got a couple of pivot lows here. So not sure I'd go out and buy this until after June, and because you want to take advantage of these after a pivot low with increasing probabilities of moves up in the future. So another thing to keep in mind here is that pivot lows and pivot highs have much higher accuracy than 1 standard deviation moves up because they are more rare. So because the 1 standard deviation moves are much more common, they're also less accurate, and you'll get more kind of false positives with a 1 standard deviation move up. So that's something you should keep in mind when you're interpreting these. And we can take a look at XMR here. Again, some nice clusters in combination with some pivots. Maybe wait until later in the week, June 8th, we've got this 12% probability of a pivot low. And then after that, we can see a couple of waves up. So let's take a look at Bitcoin and Ethereum before we move on. So with Bitcoin right here, we've got Mercury planetary line on display. So I'm going to turn that off. Shows that Mercury is just finishing its retrograde phase. Okay, so we've got some probabilities of 1 standard deviation moves up coming in the next couple of days, but then it goes back down. Then we've got a pivot high here a little bit after the some 2 standard deviation moves down. So it's not really a super clean forecast, to be honest, for Bitcoin. I like to see the pivots and the moves in a bit more alignment than what we're seeing here. Maybe this would be a good one to just to stand aside for a while until, you know, July 5th. We've got this pivot low here, July 5th, 17% probability of a pivot low. And this is in line with this 2 standard deviation move down, 56% probability of a 2 standard deviation move down. And then after that, we start to see some increasing probabilities of moves up. So I think really patience is the name of the game here with Bitcoin. Ethereum, again, won't be too much different. We see some minor moves up potential in the short term, and then some more minor moves down in June, and then a cluster of 1 standard deviation moves up. So again, there's nothing super clear when it comes to either of these coins to, you know, indicate there's a giant pump in the near future. Unless you've got a really solid process for day trading these things, it's probably best just to be patient and hang out for a better opportunity. Okay, so let's go back to the models page. We'll take a quick look at India before we finish the call. All right, so if we look at India and we're looking at probabilities over the next 30 days, we can take a look at moves up, 1 standard deviation moves up and 2 standard deviation moves up. Leading the pack here, we've got HDFC Asset Management, and that's got a very nice cluster of 1 standard deviation moves up over the next week. It's had a nice boost off of this low here at 1722, but it looks like next week we might get a little bit of a correction with some small 2 standard deviation moves down. So HDFC looks bullish in the short term. Go back to the models page. We can take a look at DABUR. This is one that we've been tracking. DABUR had a nice move up this week, and looks like when we see these gaps here in the 1 standard deviation moves up, that usually indicates a little bit of a fallback in price. So sometimes you don't need 1 standard deviation moves down to see a fallback in price. Just the absence of moves up can indicate a bit of a fallback. It could just be, you know, like a smaller price change, something less than 1 standard deviation. But looks like later in the week, we've got an opportunity to position for this cluster. We've got about 2 weeks of reasonably high. One standard deviation moves up in DABUR. So still a bullish play, but it looks like it just needs to gain a bit of energy before crossing through this magic level at 521. Okay, and with that, I'm going to close the call. I hope you found this interesting and informative and helpful. Good luck trading this week, and we'll talk to you next week. Thank you.